And welcome. It's Mary Ellen McGonigal here with your Friday afternoon MEM Edge show. And as always, the show where we bring you where the action is in the broader markets. The S&P ended flat, but as many of you may know, lots of activity beneath the surface. We're going to get into all of that. And relative to last week's news, we did get notes from the FOMC latest meeting, and it was not good news. Several Fed governors cited that they would not be against raising interest rates, and that, of course, did in fact push interest rates up. I'll talk about what the impact there was among several groups. And then also we did get some data later in the week that also points to sticky inflation, and that's by way of jobless claims. They did drop this week, pointing to a strong labor market. Now, next week, it's a nice shortened holiday period, but of note is that the Federal Reserve's primary inflationary data, one that they pay close attention to, will be released, and that's that PCE data. So be on the lookout for some volatility going into that number. We also have some pretty big earnings reports next week as well, which we will get into. But first, let's go ahead and take a look at those markets and see where did we close for the week. And here we are with a daily price chart of the S&P 500. As you can see, we did have at the end of the week net a flat finish. We did close above this key 10-day simple moving average, which is certainly good news. We have that RSI and MACD both in positive territory, the near-term uptrend remaining in place for this broader market index. From here, let's go ahead and take a look beneath the surface. You want to be aware of where that relative strength versus the weakness is potentially shaping up in the broader market. Sector allocation for your particular holdings is accountable for 33% of its possible advance or decline. This according to years and years of study by William O'Neill. So let's go ahead with that relative strength indicator, sorting these 11 sectors, and strength up here led by technology, which continues to march to a new high, up 1.7%. We'll get into where that strength was in that group. And then also up here at the forefront, utilities, they did pull back a bit this week, but remaining up here at the forefront. A lot of that having to do with this strength going into the month of April and beyond. Of note, within this utility sector, I would view this pullback as a potential buying opportunity. A lot of these electric utility, not all of them, you do need to be quite selective. My MEM Edge report has selected two key names that actually mentioned the need for electricity among data centers as part of their growth prospects. So as we move through, taking a look at some of these other areas up here at the forefront, communication services, I'm going to share with you two names that are heavyweight in this group that are looking quite attractive as that group is very much poised for a base breakout. Now, as we move through, taking a look at some of these areas that did pull back, certainly more than the markets, which were flat. And here we are. This is the financial sector down 2%. Now, this is one of those areas that can be negatively impacted due to a rising rate environment. We'll get into that and more. And then also down here, REIT stocks, another area that generally tends to trade lower in a rising interest rate environment as well. So from here, let's go ahead. Actually, I did want to show this consumer discretionary sector because we are very pronouncedly back below that key 50-day simple moving average with negative momentum as this group continues to struggle. So moving along, I did want to share with you beneath these sectors, some of these key industry groups, ones that I certainly find very helpful as far as weeding out where that strength is, where you want to be focused on putting new money to work if you're inclined, and areas you should certainly be aware that they're in a downtrend. So front and center here, up here on this area that is relatively strong groups are semiconductors, and we all, I'm sure, are well aware of NVIDIA. As we move through, I will share with you how you can stay on top of NVIDIA and give you ideas on how you may treat your holdings within that particular name. But here we are with the semiconductor group. The overall group was up 4.5%, just pulling back ever so slightly from a Thursday base breakout. The momentum indicators in constructive territory. Now, I will tell you, among semiconductors, only 60% of the stocks in that group are above their key 50-day simple moving average. And it's very similar to elsewhere in the markets. You need to be really selective. And again, subscribing or trialing my MEM Edge report will put you in front of those leadership names. There are 3 names in particular that are very much in leadership position, and they are continuing to trend higher. So let's move through, take a look. I talked about consumer discretionary. This is XRT. Now, it did have what I might call a false gain here. This was that move into those meme stocks, pulling back, but it is in the throes of potentially regaining its uptrend, moving above that key 50-day simple moving average with the momentum shifting into positive territory. We're going to get more into that because next week we have several key retailers that are due to report their earnings. And we have a very good report from what I would call a well-known stock today that we will talk about as well. Software stocks, they did struggle. And this again was due to Workday, for instance, came out and they gave a weak prognosis, which in turn pushed any number of other software stocks lower. And we are back at that 50-day simple moving average. This also is an area that is very impacted by interest rates. Rising rates are not good for these subscription-based software stocks. So let's go ahead. We would be remiss to not take a look at this yield on the 10-year, and you can see that we are generally trending higher. It's not explosive, similar to other periods. This is when the markets pulled back, but certainly trending higher. Again, that PCE data is going to be really critical next week relative to a continued impact on some of those areas we mentioned. Another interest rate sensitive area, this is home builders, XHB, the ETF, and you can see that it has re-entered a downtrend. It's done so in the past periodically. I believe longer term investors, you can stay with that if you're in that ETF. But of note, these interest rate sensitive areas are certainly seeing movement. Now, from here, I did want to go ahead and share with you a daily price chart of the Dow Jones Industrial Average. And quite simply, it is because the Dow lost 2.3% this week. And a couple of things I want to highlight here, and that is the fact I wrote an article here, if you go to this particular tab, back in this time period at the beginning of April about the Dow Jones Industrial Average and how, in fact, it did lead as far as deteriorating prior to the S&P and the NASDAQ. So keeping an eye on that as another potential occurrence. And what I did want to highlight here when looking at this Dow index, that we do have this MACD poised for a negative crossover, and that's not a sell signal. It has had periods where that crossover has taken place and has simply signaled that the upside momentum has shifted to sideways. But when you marry that MACD black line down through the red with a negative RSI, it can be more telling. This RSI turning into negative territory is not a common occurrence. So when it takes place, take note. Also, we are just on the cusp here of moving toward that key 50-day simple moving average. A close below that would be negative. Now, from here, I did want to share with you those Dow names that are generally have been exhibiting weakness. And this is something you can do quite easily on stock charts. You can put together a list of those Dow components and ask to see what's called that candle glance 2-month daily price chart view. And again, using that RSI. Now, not all the news is bad. Walmart came out with good numbers the week before last, gapped up into a nice uptrend. Raytheon, part of that aerospace area that is doing quite well. So as we move through, what I do want to share with you is where that weakness is beginning to emerge. And first up here, consumer staples, anyone that is in those names, this is Procter & Gamble, just potentially beginning to roll over, not threatening quite yet, but it is a sign because oftentimes these consumer staples names will fare well when interest rates are declining because they offer nice high yields. So let's move through another staples name here, KO. You can see that descending movement in that price action, the RSI moving into negative territory. And then further below, Caterpillar did move back below that key 50-day simple moving average, negative momentum indicators there. And then energy names, that was the worst performing industry group last week, down 3.8%. And here we are with Chevron and Exxon both exhibiting quite negative price action, breaking below that key 50-day with negative momentum in there. Also, the price of oil was down 2% last week of note. But as we move through, here are some of these consumer discretionary names that are not faring well. Home Depot continuing to come under distribution, already quite negative. We'll take a quick look at McDonald's for those that have not seen it lately. It is certainly continuing under distribution as well. Lots of high volume on that selling. So that's an overview as far as the Dow Jones Industrial and where that weakness is. From here, I did want to take a look together at NVIDIA. First up, I'm going to share with you a daily price chart, and you can see this is Thursday's gap up in response to the company's super strong earnings and sales outlook. The stock is just on the move given the strength and the growth prospects. And we did experience this nice gap up. Now, elsewhere in the markets, you may recall Thursday was a very difficult period. So to see this stock buck the downtrend elsewhere did give a sense that we could see a little bit of a continuation rally today, which we did. Nice high volume on that gap up, nice positive momentum here. So on the daily chart, what I've done is added this 5-day simple moving average. And we can go back. This period here is the gap up on strong earnings from NVIDIA last quarter. And oftentimes it's helpful to have a guide on the lookout for potential price movement going forward after a very similar gap up on strong numbers. Take a look at the positioning of that MACD relative to precedents, further upside still potential here. Let's go ahead and drill down further. And I'm sharing with you now a 2-hour price chart so that we can capture that gap up movement on this intraday chart back here in February. And here we are. We had that gap up, about a 4-day rally, 5-day, a little bit of a pullback. But of note is that during this period, we did have that RSI remaining up here generally in positive territory, sharp pullback, a move potentially up to that prior high. However, once this MACD, I'll go ahead and mark this up so that you can be aware using a more refined or certainly a more zoomed in view. We can take a look at NVIDIA as we advanced toward the end of March into the beginning of April. And this, of course, was a period when interest rates were beginning to rise. We did get that RSI into negative territory, and likewise with that MACD. Now, this did signal a period that was over 3 weeks and a 10% pullback in NVIDIA before it regained its upside momentum signaled initially by this MACD black line up through the red, a move back above those moving averages, and that RSI back into positive territory. From here, let's go ahead and take a look at a longer term monthly view of NVIDIA. And when you're looking at a monthly view, you will want to add a 6-month simple moving average. And the reason I'm highlighting that is the fact that if you are a long-term investor, you're looking for investments that you want to buy and hold, this is going to be your go-to chart. This monthly chart will keep you in the stock. We can see NVIDIA remained above this key 6-month simple moving average. That pullback I talked about, barely a blip. And then go ahead and use historical precedent. NVIDIA has had many other periods of winning ways, and you can see how using this longer term chart can really keep you with a winning stock. Now, from here, let's go ahead over and take a look at those magnificent 7 names, same view with these 2-month charts. And I wanted to share with you a couple of charts that are certainly very compelling to me, and that is Netflix. Now, Netflix did have a nice 4.5% 0.5% advance last week, but in turn, the stock has broken out of a base. And when you look at those momentum indicators, we do still have further potential upside. Now, this gap down, you may recall, the company is no longer providing subscribership numbers. It had investors concerned that that indicates that they may not be in a growth phase. However, obviously they've gotten over it. So we can see this nice base breakout that took place with these positive momentum indicators. Let's go ahead and take a look at another name among these Magnificent Seven, because they have been ebbing and flowing as far as moving in and out of favor. We talked about consumer discretionary names struggling. Here's mega cap retailer Amazon just drifting down below that key 50-day simple moving average. And then also of note is Apple had a very sharp downtrend on Thursday. However, it did recover. We're back above that 10-day simple moving average. Very interesting. And then last up, taking a look at Alphabet. And this is that type of name where it did have a nice advance last week, pull back to that 10-day simple moving average that proved to be an ideal buy point. We're still parked very close to that 10-day simple moving average. So this is another name that looks interesting here at this point in time. Now, from here, we're going to take a look at some of these names that are due to report their earnings next week. And I did mention to you that retailers are potentially in a period where they may be reversing their downtrend. You certainly don't want to trade on hope. But let's go ahead and take a look at, for instance, a company that reported today. This is going to be DECK, Deckers. They are the UGG boots, but also Hoka sneakers. And they came out with great numbers. Look at this gap up into a base breakout, nice bullish characteristics, poised for further potential upside. But also what I wanted to point out to you is the price action going into that earnings. DECK did reverse its downtrend with a close above this 50-day simple moving average. This is a stock that has been a big winner for MEM Edge subscribers, and it's on our long-term buy and hold list. But from here, what I did want to do is share with you a company that has also been a leadership name in the past, and they're due to report next week. This is Dick's Sporting Goods, DKS, not quite the same as Deckers, but they certainly are in that retail space and sports affiliated. And let's take a look. DKS has struggled with that overall retail group coming out of the big overbought position. And you can see the stock is attempting to reverse its downtrend. Now, no hero by gut buying early. You definitely want to wait until you see DKS move back above this key 50-day simple moving average, get that RSI into positive territory and that MACD up here as well. But it's certainly one of the names on my watch list. Also, we can take a look at Costco. They are due to report next Thursday, and the stock really has been elevated here. They did come out last week with their sales numbers, which were quite constructive. So it will be interesting. Oftentimes, these names that are sitting here up at new highs are not going to be as rewarded if they come out with good numbers. Also, I did mention that software names, a couple are due to report next week. And first up here is well-known company Salesforce, which is part of that Dow Jones Industrial. And you can see it did fall in sympathy. I talked about another software name that had a weak prognosis going forward. But here again, we are very much below this key 50-day simple moving average. Would not want to own this stock going into their numbers, but certainly if we can exhibit and see a nice gap up close to a base breakout, it would be a lot more compelling. And that's it for this week. Everyone, have a great long weekend. If you like what you've seen, go ahead and hit that like button. Any questions you may have, you can put them down below as well. I'll see you here again next Friday.